Greetings, ladies and gentlemen. It has been a little while. I took a little time off for the holidays, but now I am back. We are going to do our weekly DCA today, and I'm going to talk about the macro trends that I am trading, and it's going to be a whole lot of fun. If you missed the webinar recently, we went over John Acuff's All It Takes Is a Goal. Great book if you guys are trying to set goals and follow through on them. I did actually skip 1 week of my DCA goal into this $100 account, but we still have 3 weeks now worth of money to trade. What is the command for screen recording? I can never remember it. Command Shift 5. Okay, so I believe we are recording now. Hopefully that's the case. Guys, if you missed the webinar that we did recently, we're going to do another webinar February. That's going to be all about money. This most recent one was specifically about goal setting, and we covered John Acuff's All It Takes Is a Goal. Great book. That's a book that we all went through last year. We're going to go through other types of books like that in our communities. The other thing that we talked about is setting financial goals. So one of the things that I wanted to talk about is 2025 New Year's goal setting. So most people think that the reason that they do not accomplish their goals is because they set unrealistic goals or they set their goals too high. However, I think this is unlikely. So I want to do a thought experiment. Think about in your head, what is your goal? Pause this for a minute if you need time to think. How will that goal change your life dramatically? Most people are going to say that it doesn't change their life dramatically if they attain that goal. So here's a question for you. Why would you make the changes you need to make in your life if it's fundamentally not going to change your life? Why would you change your life to get the goal if the goal itself won't change your life? So I think that it's less about setting unrealistic goals or too lofty of goals or goals that are too high. I think the vast majority of people are failing because they're simply not setting their goals high enough. And so they're not willing to do the things that they need to do in order to accomplish that goal, because if they get it, it's not really that big of a deal. So enter the NestWiser communities and this whole thing that I'm building right now. We're going to be helping people to achieve their financial goals as well as their personal goals, health, wellness, fitness, all that jazz. So we're going to have 3 separate communities. They're going to intermingle sometimes and on certain occasions, but they're fundamentally 3 different communities. And so if you are one of these 3 different people, this is a thing to think about. The first group is the financial security community. These people are trying to attain financial security. What does that look like? It looks like free of bad debt, right? They want to be free of bad debt. They want to get all of their bad debt, their consumer debt, their credit cards, their auto loans, all that nonsense off of their balance sheet of their personal income. If they have debt in their businesses that's not working for them, they want to get it off the balance sheet. Number 2 is they want to save up 3 to 6 months worth of expenses. If you are a business, this is 1 year's worth of expenses. And number 3 is have a retirement plan that does not suck. If you're a business owner and you're in this space, it might be have an exit strategy that does not suck. So if you have a plan that will allow you to retire and live your life maybe at 60 or maybe 59 and a half, that's the financial security crowd. So if you have all of these things, you're free of bad debt, you have 3 to 6 months worth of expenses saved up, and you have a retirement plan that will actually work, and you can retire at 59 and a half or 60 years old, congratulations, you have financial security, and you might be in the next community. If you don't have these 3 things, guys, shoot me an email at fwgtinc@gmail.com, and I will send you our net worth calculator and our budgeting template. You can also pull up a net worth calculator or a budgeting template literally anywhere else. But those are the places to start. And if you'd like help going through that process, you can also shoot me an email and I'll help you out. If you already have all those things, you might be in community number 2. And community number 2 looks something like this. This is the financial independence retire early community, the FIRE people, right? These people already have a retirement plan. However, retirement at 60 sounds like no fun, and they're wondering, why can't I retire earlier? These people are trying to attain uncorrelated streams of income. So a highly correlated stream of income would be like if you have a W-2 job where you get a regular salary and then you also get commission on that job. You have 2 streams of income, but they're both highly correlated. If you lose your job, they both go away. So people that are in the FIRE community are trying to create uncorrelated streams of income. How do I make a little bit of money here and a little bit of money somewhere else so that I can spread out and diversify my income? That way, I'm not going to get hit with an emergency and have all of my income go away. This group of people wants to have a retirement plan that has a plan for future growth. So people who have financial security might have a retirement plan. A lot of people have a plan like this where after their retirement it might grow a little bit, but the idea is that they're going to spend all of their money before they die. Individuals that are in the FIRE community are trying to build a portfolio that will continue growing throughout their life, get bigger and bigger and bigger, and at the end of their life they will actually have something to leave to their kids or to whomever else. The people in this community want to take control of their own financial situation and start looking at some unconventional ways of running their money. They don't want to use a financial advisor. They want to learn and understand how to manage their money themselves. And that's what we're going to be talking about mostly in this community. If you are a business owner, you might still fall into this category, but we want to talk about some unconventional ways to invest in our business also. So the number one thing that you guys can do, because I want to provide value to each of these communities, just free value in the video, the number one thing that you can do is check your 401k fees and expense ratios. So many people that have financial security, they have paid off all of their debt, they have 3 to 6 months worth of savings, they have a 401k. The problem is they don't realize that their 401k is getting wrecked by their financial management company. This shows up in the forms of insane management fees that they just take out of your account, oftentimes without telling you or without you knowing, and this is wrecking your retirement plan. So check for those fees. Those fees may be on the bottom line of your statement at the end of every month on that account. However, if it shows in the form of an expense ratio, it might just be a mutual fund that you're invested in that has a very high expense ratio. What's a high expense ratio? Anything that's over like 0.05 is a super, super high expense ratio. The expense ratio is what you pay them in your gains to manage the mutual fund. If your expense ratios are over 0.05, you are losing a lot of money, and there's a lot more that you could be putting in your own pocket if you got your expense ratios under 0.05. So check these things out. Every single time that I talk to somebody that is in this community, they tell me for sure I'm not getting screwed by fees, and every single time I find some ridiculous fee that they are paying that could cost them over the course of their investing career hundreds of thousands of dollars. So the next group is the financial sovereignty group, okay? So these guys are the wheelers and dealers, they're the business owners, they are not afraid of volatility, they're not afraid of risk. These are the individuals who are trying to build the world that they want to live in. They're buying businesses, they're doing unconventional financing deals, they're doing mergers and acquisitions, they're acquiring smaller businesses to add to their business. They have a vision that they want to make into a reality, and they're willing to do the work to build it. A lot of people are having difficulty understanding what's the difference between the FIRE community and the financial sovereignty community. And there's two ways that I explain it to people. In order to get into the financial sovereignty world, I think the stuff that we're going to talk about in that community really requires you to have maybe 50 grand that you're ready to take out into the backyard and set on fire. And what I mean by that is invest in something that has a probability of going to zero. These are the venture capital type people. We will be talking about how, if this sounds interesting to you, how do you get yourself into that place in the FIRE community, in that financial independence community. So if this sounds interesting to you, we will be talking about how to transition from the FIRE world to this world in the FIRE world, if that sounds cool to you. So the financial sovereignty people are doing unconventional financing, they're doing unconventional stuff. They're probably losing a lot of money, but when you start losing $50,000, you are probably in the ballpark of playing games where you could make $500,000. So that volatility ride is tough for a lot of people. Some people are not into living life that way. Some people are. That's why we have different. So see if you qualify. The main qualification is, do you have 50 grand that you're ready to invest in a deal right now? If that's the case, hit me up, send me an email. We'll talk about kind of what your goals are and what your thoughts are. And see if that's something that you actually want to do. But again, I won't have you guys join that community if you are not feeling it, or if you're thinking that it might not be the best place for you. Maybe start out in the financial independence community, and then if you are outgrowing that sort of life, then maybe we talk about transitioning you over into the sovereignty community. Okay, so that is what we talked about in the previous thing. That is what is coming down the pipeline. These 3 communities are going to be starting in February. So if you guys want to lock in a space for yourself in these communities, please hit me up. We're going to get together and do lesson plans and talk to people about how to get from the current step to the next step. We're going to have presentations from different business owners that are sponsoring those events. And it's going to be tons and tons and tons of fun. Cool. So shoot me an email, fwgtinc@gmail.com, if you are interested in doing one of those communities. Now, the next thing I want to talk about is my DCA, my weekly DCA, and what I'm doing with stocks and what I'm doing with crypto. So this is my $100 account. Remember, if you saw my previous video, we started the $100 accounts. I mean, it was actually 4 weeks ago, but I skipped a week for Christmas. So I've been DCAing into these accounts $100 every single week, both into the Kraken account and into the Robinhood account. So you can see them both right there. We are up about 15 bucks in the Robinhood account, and we are down about 11 bucks in the Kraken account. But again, we just started, again, 4 weeks ago. I skipped 1 week in DCA, but that happened. So I did just DCA another $100 into these accounts, and we're going to trade them, and I'm going to talk about the core macro trends that I am looking at for 2025 in my investing. So check this crazy chart out. One of the main things that I am trading is this, the M1 money supply on the Fed. This is a Federal Reserve of St. Louis website. And you can find this chart. This is the last 50 years of the federal M1 money supply. So this is what I call the framework for the Bitcoin trade, and it's, I think, one of the greatest trades on the face of the earth. But essentially, this is what's going on. This is 50 years worth of global M1 money supply. It started going up dramatically in 1971. We started seeing really severe moves, but none of it even compares to what happened in 2020. 2020, this is what happened to the total money supply. That is how many dollars were printed and created and added to the global M1 money supply. That's liquid monies. Global M2 shows a slightly different number, but I think this chart is ultra telling. So we had a massive crypto boom, shooting way the hell up into 2022. As the global M1 money supply pulled back in 2023, that's when we had the bust in crypto. And what's happening right now is it is turning the other way around, and it's going to go back up. So decentralized currencies, risk-on assets are starting to heat up. And in 2025, I think it's going to be super hot. There's going to be a lot of volatility. You might get wrecked in the markets if you are not playing them carefully. But what I do is I just DCA into the things that I think are going to perform the best. And so that is the major trend that I'm riding. The other trend that I'm paying attention to is this one. This is the productivity and wage gap. Basically, the bottom line here is wages and average pay as it has gone over the last 50 years. And the top line is the productivity of the economy. So that's how much the economy is producing versus how much people are getting paid to produce things. And this massively decoupled right around 1971. Two things happened. President Nixon took us off the gold standard, decoupling the dollar from gold entirely. It was already fairly decoupled from gold. And so if you really want to go into depth on how severe that problem is, I can talk about that in the future. Essentially, that was like the straw that broke the camel's back for fiat, and now dollars are basically worthless. The other thing that happened in 1971, the same year, was the microprocessor was invented, making all of the value fall on computers rather than on people. So people are making less money, but assets are getting dramatically more expensive. So this is what happened when the microprocessor was invented, and here's where we are basically today. I think that a similar trajectory move is going to take place with artificial intelligence, and so I am heavily investing in the macro trend of AI over the next 5 to 10 years because I think it's going to do spectacularly. So how do we go ahead and actually make money off of this knowledge? Global M1 money supply is going absolutely nuts. And when this massive move happened in global M1 money supply, I still don't think that we have actually priced in that move into the market. I think this is like a once in a generation or maybe even multi-generation opportunity for you to capitalize on the fact that there is way more money out there than has ever been in the history of ever before, and this chart shows what's going on. I don't think that this move has been priced into the market yet, and yet it's going to continue to go up. So that is why I'm buying Bitcoin, and I'm going to continue to buy Bitcoin for the next 5 to 10 years. It's going to do very, very well, albeit with a lot of volatility. And then over here, this is why I'm investing into artificial intelligence stuff like NVIDIA, Tesla, the big ones, Palantir, all of those types of things. So let's look real quick at the market for cryptocurrencies and see where everything is at. We've got Bitcoin up, it's sitting around $98,000. I've sold most of my Bitcoin because I think the vast majority of the gains in Bitcoin are behind it. It's probably going to do more. Maybe it doubles from here. I don't know. But I think that some of these other coins are going to move a lot harder in 2025. And so I'm indexing for that. So right now, like I really like SUI, and I've been wanting to add to my SUI position for a while, but it's just like never a good time to get into SUI. The one thing that I really don't like about SUI is the fact that the total supply of SUI is 10 billion and the circulating supply is only 3 billion. So if you don't know what that means, essentially the people who started that network are still holding the vast majority of those coins, and they unlock regularly. They're locked up so they can't sell them. They unlock regularly throughout the time. So if SUI goes up dramatically and it's like $10 or something like that, the probability that there's going to be an unlock and people are going to sell those tokens, venture capital individuals or people who started the network are going to sell those tokens and dip the price again, is pretty high. Now, is $5 a bad price for SUI if you're going to hold it for maybe 10 years or something like that? It might be a good plan, but I don't know whether SUI is going to be around for 10 years or not. They are a good team. It's just a highly, highly, highly speculative trade. Now, Solana has been around for a lot longer. 591 million Solana are in total supply, and 482 million of them are in circulating supply. So that's a much better ratio for me. And so my biggest holding is actually in Solana. And if you look at the 1-year price trajectory, it was up here at $253. We went into a dip, and now it's showing strength again. I think DCAing into Solana under $250 is going to be a good move. Once it breaks that 250 range, it is going to go upward. I'm targeting, I don't know, maybe 500, 600 bucks at least for Solana. It may be higher than that. Who even knows? So what I'm going to do is I'm actually going to buy my Solana. I did buy some Internet Computer Protocol. Yeah, my last video I talked a little bit about ICP token, but I didn't buy it. I ended up buying Filecoin instead. This time around, I am buying ICP token. This is the number 2 currently AI token, and I think the AI tokens are going to do well. What Internet Computer Protocol allows for is decentralized storage of information and decentralized use of GPU power, which is going to be necessary for AI in the future, and I think this is going to take off in 2025, so I did buy some ICP token. So, but today I think that the best buy is Solana. It happens to be the only one that's kind of down right now. And I'm always looking to buy, especially in this account, something. There's $100 worth of Solana. Confirm. Buying that Solana. Order submitted. Maybe the order will be executed. I'll probably get it here in a minute. So yeah, so anyway, I did buy some ICP. Filecoin is still sitting in there. I'm down like 30% of Filecoin. What a ride. Actually, it's only down about $10, so it's not a big deal. Okay, cool. So the other trend that I want to follow, so now we've knocked out the Bitcoin trend. That's global M1 money supply. Bitcoin is going to go crazy. Most of the gains we've already taken out of Bitcoin, we're rolling into other coins. The next big trend that we're following is the AI trend. So we buy some ICP to get on the AI trend. I also bought some Solana. I think that Solana will go up dramatically as coins underneath it that do AI type stuff go up. Solana will go up. It's a layer 1 solution. And right now it's kind of the only one that makes a lot of sense to buy just for today. Here's another trend that I want to follow. I want you guys to watch this video with me real quick.
50 to 70 to 80K a month doing e-commerce. Wait a minute, you're
And
making $50,000 a month at 16 years old?
yes, yes, sir.
Are you telling me the truth?
Yes, sir. I do e-commerce, so I run drop shipping websites through Shopify. I do eBay or Amazon to eBay arbitrage.
Okay, so that particular guy is doing Amazon to eBay arbitrage, but essentially he's a 16-year-old kid who's making $50,000 a month, 50, 60, 70, $80,000 a month. And he's mainly doing this through TikTok and TikTok shopping. He's doing Amazon to eBay arbitrage. But this TikTok shopping trend, the way that that is moving products is really spectacular to me. One of the biggest products that is moving on those things is cosmetics. And so if you check out Elf Beauty, this is like a teeny bopper brand. This is a cosmetics brand that has been struggling more recently. Their stock price has been going down. I think that they are in a really good place to buy. They have shown recent strength, but they've been going down in the more recent short term. But I think that they are going to right size this movement and come back and go up dramatically. So over the next 5 years, 10 years or so, I think that Elf Beauty is going to do really well. A lot of these Elf Beauty products are in the stores. They're doing very well. They have massive displays in the stores and things of that nature. But I also think that they're going to move really well on TikTok shopping. If you watch Gary Vaynerchuk talking about how shopping is going to be done in the future, where influencers get on and it's a live shopping experience, they're live selling while they're on like a live streaming service. I think that Elf Beauty products are going to do really well in that area, and for that reason, I have been adding some Elf Beauty to my other portfolios, and I'm also going to add it to this one. So I am going to buy $100 worth of Elf Beauty in my Robinhood account. Boom. Also, it happens to be that their PE ratio at the minute right now is like 67.81. Which is much better than it was, a couple weeks ago. The last time I looked at them, I decided not to buy them. Their PE ratio was like double that. It was like 120 or 140. So it wasn't the right day to buy. But now the price has dropped back down. It's come back down to earth. I think a 60 PE ratio for Elf Beauty is probably actually ideal, but 67 is not, the end of the world.